Hello everyone, it is Sterling here from Day Trading Forex Live. This is the May 2016 month-end review. If you have been through these videos before, I'm going to post a timestamp below or on the video right now of where you can get to the first trade, and if you want to skip past what I'm saying, get to the first trade and go to our first trade of the month. I would highly recommend, if this is your first video, or even if it's not, I highly recommend listening to the first few minutes as we cover a few basics before we get into the first trade. Just to give you an overview of this month, May was actually our worst month since doing these videos. It was our worst trading period, worst 30-day period since doing these videos, and we were basically break even. And it was a 0.3% gain, so officially I can still say in the 13 months that we've been doing these videos, we have not had a losing month. That continues even though this was our worst month. That brings us to a compounded gain over that period of time of 272%. So 0.3% gain on a 271 last month brings us to a compounded gain of 272 this month. And that is again over a 13-month period. If this is your first video, if you're looking to learn to trade, the reason that these results are so accurate is two main things. Number one, the entry technique is mechanical. So the entry technique, I'm not going to cover it here. It's covered in other videos, obviously covered in our bank trading course as well in a lot more detail, but the entry is mechanical. So if somebody knows the strategy and another person knows the strategy, they're not going to get two different answers. While, yes, you could have a slight broker difference between one or the other, and if the entry is right on the mechanical fractional number, because the entry is measured, whether it's a valid entry or not, while that could produce a different entry, that's really a small fraction, just illustrating what could possibly distort that one way or the other. That's also why we use one broker standard, one standard for these results. I don't cherry pick what broker. If there was a broker difference, maybe it ended up better one way or better the other way. On the rare times that does occur, I use one standard. That way it's as accurate as we can possibly get. So it's a mechanical entry technique, and in these videos there's literally hundreds of members that cross-check this. There's over a couple thousand members of DTFL, and probably hundreds of them cross-check these videos. That's what makes us so accurate. They understand the strategy. They would, I can promise you, they would instantly call me out if there was a trade on there that was not a valid trade. The second thing that makes this so accurate is this right here. Every trade you're going to see is from a pre-selected level. Now this month, every trade comes from a pre-selected level. There are avenues for newly created points. During the month of May, though, every trade comes from a pre-selected point. So our first trade this month was on the 4th. Trading started on the 3rd. First trade was on the 4th, and it was a euro short from 1508. So this level right here is selected a couple hours in advance of the European session starting. And then the video is loaded in YouTube. There's a YouTube timestamp, so nothing can be, you can't go back and edit the video because there's a YouTube timestamp. People see these videos, they see the numbers at a couple hours prior to the European session start. So there's no way to go back and edit that to make it look better than it actually is, or pick a random level that wasn't in there, because there's literally thousands of eyes watching those videos, hundreds of eyes at least watching those videos to see where the levels are prior to the trading day beginning. So that's the other thing. So you take the mechanical entry technique and you combine it with the pre-selected manipulation points, and that gives you certainty as to whether something was a valid trade or whether it was not a valid trade. And that's what makes these results so accurate. That's what makes these month-end reviews so accurate. The final point I would add, guys, is that if you're looking to learn how to trade, the one thing I want to impart to people, whether you learn this strategy, whether you learn any other strategy, is it was a comment that was made, I heard years ago in a movie called Floored. It was about floor traders, and one of those traders that had done very well, he's retired, he said something that was really stuck out to me. He said, a lot of people, many people, in fact, the majority of people had bigger days than I did, had bigger months than I did. He said, but in all the years he's been trading, the one thing that always stood out to him is that it's the person that gets to their goal first is not the one that made the most amount of money. It's the person that lost the least. And what that always said to me was that a strategy, it's great if a strategy has really big upside, but often a strategy with really big upside will have the other side of that. It'll have really big downside. And so to me, what a profitable strategy, what a successful strategy does well is it doesn't lose large amounts of money. It doesn't have large drawdowns. This is our worst month in that 13-month period, and we're still at break even. So if your worst months are near break even, I'm not saying we won't have a loss, because I'm sure we will have a losing month. It just hasn't happened in a very long time. But the fact is, when we do, it will be a very small loss, because this strategy does not draw down huge if you are applying it correctly, if you're not making mental errors. If you're making mental errors, well, that's not the strategy, and that's a whole nother story. But if you're trading the strategy correctly, it does not draw down in a large way. It has very small drawdowns, and some of the worst months are around break even or maybe a few percent down. So what that really illustrates is that compounding over a long period of time is the way to get to where you want to be. Now, I just typed in trading compound calculator, and I want to show you a point before we get into the first trade. I don't know anything about this website. They just have a very, it's the first site that comes up when you type in trading compound calculator. So let's just say you start out with a balance of $5,000. A lot of people would say, you know, they'd look at 10-15% a month, they'd call that a small number. To me, that's a pretty large number. But on the retail side, a lot of people are, you know, they're saying, well, I need to make 20, 30, 40%. So 10-15% is pretty reasonable for a lot of people. Now, if you take that number, that $5,000, 15%, and you compound that over 48 months, what does that do? Well, this illustrates the point very clearly. You take that same number, and that puts you right over $400,000 in that 4-year period of time. Now, what if you go out to 5 years? Takes you over $2 million. I'm not saying that this can be done perfectly, because it's on paper, and on paper everything is perfect. You know, you don't have drawdowns, doesn't account for anything like that. But what this does show, guys, it shows how consistent, steady growth is the way to get to where you want to be. On these two pairs, on 2% risk over this 13-month period, we're right around 12%. And so that would be, you know, that would put you somewhere in the 4.5 mil over that 5-year period of time. Again, perfect application of the rule set. And that's just trading 2 pairs. What if you were trading 4 pairs, 6 pairs, 8 pairs? The number could potentially be higher. Again, you could have larger drawdowns as well because of that, but the number could be higher as well. And so it's not about, you know, getting to your end goal in 6 months or a year, because I'm here to tell you it's not going to happen. And I know a lot of people don't want to hear that, but if you learn a consistent and successful strategy that allows you to compound consistent, steady gains, that's going to get you to where you want to be as quickly as possible. And that's what these videos, that's what the DTFL strategy and education is all about. It's not about the home run. It's about the steady, consistent singles and doubles to get you to that goal as quickly as you can possibly get there. All right, I'm going to quit rambling. Let's go ahead and get into the first trade. As I showed you just a second ago, the first trade was on the 4th. It was a euro short. Ended up being a break-even trade, but it was a euro short from 1508. We had more break-even trades this month than we probably will have in a 3-month period of time. But again, 1508 right here. And let's go ahead and take up the euro, 1508. All right, so you come into 1508. This is again the 4th euro dollar. You come into 1508 here. It breaks by the required minimum 3-pip break, provides the confirming candle down, and then provides the pullback for the entry. One of the things that we were seeing in May is a significantly reduced ADR. The market was just drying up super rapidly. So during that transition period, a lot of times trades like this that ultimately, well, let's see here, entry would have been at 15 pips from the high. That's where the mechanical entry goes in, which would have been 1496. And so from 1496, this thing goes down about 27 or so pips. So in a normal range market, you know, a situation like this thing runs off, hits full take profit. And so during those transition months, which is what May was, you'll have a lot of scenarios like that where these break-even trades, you know, of the 7, 2, 3, or 4 of them turn into a, you know, couple % profit, a full 4% take profit, which dramatically shifts the months around. And that's why during these transition periods, if your worst case scenario is a break-even month, that's one heck of a worst case scenario. That's a worst case scenario I'll take every single time. Let's continue forward. And we skipped over the weekend in a few days, and we go over here to the actually the 11th, and it's a euro short from 14.17. So just to bring over the daily market preview here to show you that level. Again, the level was 14.17 on the euro, and that was right here. That was actually our first upper manipulation point, 14.17. And so 14.17 on the 11th. This trade resulted in a full 2% loss. We came into the trade here, 14.17. We break by over 3 pips, actually 3.1 pips to be exact. Confirms down, provides the pullback for the entry, and that trade gets stopped out an hour and 15 minutes later for a full 2% loss. That puts us at 2% on the month, or excuse me, negative 2% on the month. And then we go over to the next trade. The next trade was a pound trade. It was on the 13th. And this was at 43.81. This is what we term as a backside trade. Again, unfortunately, with the decreasing ADR, this was one of those situations where, you know, otherwise probably would have ran off, hit a full take profit. In this situation, we break through 43.81. We come into the backside. Now we have to have 2 candles open and close beyond the manipulation point to take a backside. So once these 2 candles open and close beyond the manipulation point, that's where we can then wait for the 3-pip break. We got it here, breaks by 3 pips, actually breaks and confirms down in 1 candle. That's what we call a single candle stop running confirmation. And then this trade, we were taking the entry 15 pips from the high at 43.69. And so from that number, runs down 28 pips, unfortunately comes back, tags us at break even, still sitting at 2% on the month. Another one of those situations where a normal sized market probably would have had the room to go down, tag a full profit. You know, instead of sitting negative 2%, you're now sitting at negative or positive 6%. You have 2 trades that swing 4% each. And that's just a good illustration of the fact that you will have, with any strategy, you will have situations that are not perfect to that strategy. Does your strategy blow up, or does it you know, maintain a decent number? Does it maintain around break even during the worst conditions? Does it maintain a small profit or a small loss through worst case situations? All right, 16th, euro trade. And I don't know if I showed you that. Sorry about that, guys. Last trade was on the 13th, 43.81. It was a pound trade, so pound manipulation points. That was our first lower point, 43.81. There you go. The next trade, since we're here, was on the 16th. And it was a euro short from 13.34, so it was actually our only listed level that day, 13.34. We were only looking for the 3rd push to the downside. And so 16th, 13.34, right there. So we come into that level during the New York session, the small, generally the small skinny box, or the tall skinny box is the New York session, 8 to noon. And this box is Asia. What's in between right here is the 2 a.m. European start. 2 a.m. to 8 a.m. is not in a block, just in case you're wondering. That's all Eastern time. So it comes up, provides the break, confirmation down, and this one, it confirms about 12 pips from the high. Therefore, we would take the entry immediately because we're already within 15 pips from the high. So we take the entry immediately, and this one runs off. And closes right around here for roughly about a 10, 11 pip gain. This trade, we're using what we term as a dynamic stop, so only 12 pips to the high. We add another 5 to that. That gives us a 17 pip stop, 34 pip take profit. So 10 pips, well, 10, 11 pips right in that number. That works out to a percentage gain of 1.3%. 34 pips would have been 4%, so that works out to a 1.3% gain roughly. And that takes us to negative 0.7% on the month. Next trade was again on the euro the next day. It was a euro short, and it was a euro short from 13.41, so the upper level had crept up just a bit. Instead of 13.31 or 34, we had 13.41, and still looking for a 3rd push to the downside, 13.41. So we come into 1341, which is right about here. And this is just a really nice setup. Exact same situation to yesterday. I mean, a market that otherwise probably would have given you the run, given you a run down. Remember, at this time, we had like a 60, 65 pip range on the euro. If you're sitting on a normal 100 pip range, that's another full take profit trade. Again, worst case conditions, what does your strategy do? Does it get its butt handed to it, or does it maintain a consistent growth or break even, or worst case, a small loss? So these are worst case conditions. 1341, same exact situation. Beautiful stop run. We come into 1341, beautiful confirmation down. We take the entry in this case 15 pips off the high, which is basically right where the confirming candle closes. And so from that mark, this runs down and it ends up with roughly a 2% take profit, because it would have been a 20 pip stop, 40 pip take profit, ends up somewhere around 20 pips, which is 2%. And another classic example of a standard market would have definitely ran off, hit a full take profit given just the sheer size. And that takes us up to 1.3% on the month. Next two trades were two break-even trades, and the next trade was on the 20th. So we skip over here the weekend to the 20th. And this was a pound trade. It was a pound trade. It was a pound long from 45.68, again on the 20th. So we'll drag the daily market preview over here. Lower level, one spot 45.68, one spot 45.68. All right, pound long, 45.68. We come into it at the beginning of the European session. So it comes down, breaks, two candles later, gives us the confirmation. Then you get as much pullback as you would have wanted. Ultimately, this breaks below the low by about 2.5 or so pips, worst case. So it got within about a pip of our stop, maybe a pip and a half, depending on spread. And then from where the entry would have been, which would have been, in this case, would have been 20 pips from the low because it went to the wider scenario. That would have been right here at about 45.73, and it ends up roughly at about the same mark. It would have been probably a pip or two down. I rounded that up for even number purposes, and that leaves us at 1.3% on the month. Next trade, euro short, same day. And so the euro short that we had on the same day was from 12.29, and so we'll drag this over again. Lower level, or excuse me, this was an upper level, 12.29, so we're looking to short from that point. And we come into 12.29. We get a break here, and then it takes a little while, but a couple candles later, zoom in a little bit, we get this confirming candle down, and this confirming candle is about 15.5 pips from the high, so therefore we take it when it's 15 pips from the high, when it pulls back to 15 from the high, and that's at 12.22. So another exact situation. This was in the room. I believe we were in the live room at this time for this trade, and it runs off, hits about 18 pips of profit or so, comes back. We're not quite at break even, so we're still in the trade, floats back to about 5-6 pips down, and then comes back to basically right around the break even point at the time of the exit, maybe a few pips up, maybe a few pips down, counted as a full break or a break even trade. Another situation where a normal sized market would have had at least a chance to get to a full take profit trade, probably would have got very close. And that leaves us at 1.3% for the month. Ton of break-even trades, more break-even trades than we'll see in a 2-3 month period, all crammed into 1 month. And the same thing occurred the following day. The following trading day on the 23rd. This was a pound short during the New York session on the 23rd. So we'll drag this over, pound short from 44.87. So this was the one trade in the month that was not a pre-selected point. You'll see we were looking for the second push to the downside from 45.53, and what happened here on this day is that on 45.53, that was all the way right up here. So we got close to it, but we just never broke for the valid entry to begin with, and then we ran off to the downside. What we had come together is we had what we term as a backside trade. And a backside trade it's the backside of if you're talking about a floor, it becomes a ceiling. That's the very simplistic definition of a backside trade. And so this comes into the backside of that significant level. We come into the backside, we confirm down in another situation where it runs off. Ultimately, from where the entry was, which would have been 20 pips from the high, 44.72. 44.72 runs down, hits about 30 pips of profit. Normal size market, another situation where you can never know for certain, but you do know that the probability is significantly increased if you're dealing with a normal size market of running that extra distance. And in this case, comes back, tags us at break even, ends up with another break-even trade, leaving us at 1.3% on the month. That was the only trade that was not pre-selected, or the only trade from a non-pre-selected level, and does not skew the results either way. Next trade that we had, this was a loss, and this was a loss on the euro dollar. It was on the 24th, next day, from 11.51. So there's 11.51 right there, and this is the 24th. If I drag over the daily market preview, 24th, 11.51, that was our final lower level, 11.51, final lower level of the day. And we come into it, we provide a very strong confirmation up. I like that trade a lot, 11.51. I didn't really have any, well, I can't say I liked it. I like the trade enough. It's not really a matter of whether you like it or not. It's a matter of, is it mechanically valid? That's the beauty of the entry. But the point is, I have no issue with the entry. It was a strong reversal. It looked really nice on the setup. And anyways, provides the confirmation, provides the pullback for the entry. A couple candles later, stops us out. 2% loss takes us back to negative 0.7 on the month. This was kind of an unfortunate day. One thing to list is that we did have a lower level of 11.81. So there's 11.81. And I talked about this level as a good backside shorting opportunity if we broke it. And that's exactly what you had here. You did have a break of that level in a short, but we will not take a backside trade if we cannot hit a full take profit before the ADR is hit. So the ADR was really close on this one. And so if you did take the backside short, which it was close, because it was close, I'm not going to count it. It was a full take profit trade, but again, for the sake of these month-end results being as absolutely accurate as possible and having no room for, questioning the results, I was not counting that trade. Still am not counting that trade. I know a lot of people were in it, which is why I'm going to mention it and go over why I wasn't. But so bottom line, just too close to the ADR to take that trade. The point behind that is, if the ADR, you think about what the ADR is, it's the average daily range. So if you have to exceed the average, if a trade has to exceed the average just to hit a take profit, then you're now in a lower probability position. That's the principle behind why that rule's in place, and that is why that backside short from 11.51 was not valid or was not counted as a valid trade, even though I know a lot of you guys were in that position. The other point here, or the other trade, next trade I should say, was another break-even trade. No surprise there this month, 46.50. It was on the 25th, so a day later. And we're coming to the end of our trades here. This is the 25th, 46.50. Dragging this over, 46.50 was an upper point, one spot 46.50. So we'll take it right there. And we come into that at the beginning of the European or London session, 46.50. It confirms down, provides the pullback for the entry. This trade pulls back, and the entry would have been 20 pips from the high at about 46.43. And what was nice about this, I guess I can't complain too much. It does run off enough to get to break even. Runs off enough to get to break even, ends up being closed out as a break even trade. And that keeps us at 0.7%, negative 0.7%, sorry, on the month. And that takes us to our next trade, which was a euro-dollar trade. It was a euro long on the 27th. And it was a euro long from 11.32 on the 27th. So lower level, euro-dollar, again, euro-dollar manipulation points. Lower level, 11.32. And it was a long from 11.32. This was a trade where we had news coming out. Yellen was speaking at, I believe it was 1 o'clock or 1:30, so we were exiting ahead of her speech as per our rule set. Comes into 11:32, provides the break, provides the confirmation up, and this trade ultimately, from where the entry would have been, ultimately results in a 1% profit. We ended up with a 1% profit on that trade, and unfortunately, you had her speaking that day. You know, we were getting a nice movement to the upside. Were we going to get the reversal? Well, you know, you never know. Ultimately, I'll take that over a sharp stick in the eye. That does put us at 0.3% for the month, which was the month-end final. So it does put us into positive territory. But, you know, unfortunately, another trade that just had some kind of bad luck for it, going for it this month, in combination with the fact that we had a significantly reduced ADR. As we look at the final trade of the month, it was a break-even trade, euro-dollar long from 11.51. This was on the final trading day of the month, 11.51. Euro long was from the upper level of 11.51 right there. And so we go over to the 31st, and it was a euro long here, 11.51. And what we had was another situation of a significantly reduced ADR, unfortunately, kind of you know, screwing us out of a position here. And then the other factor was I believe the pound was getting hammered on this day as well. Yeah, there's a glimpse over at the pound. The pound had, I believe it was some news, a comment was made. First 15 minutes it drops almost 90 pips, a little over 90 pips. And so this one, you know, are you going to be on the right side of some random news? Well, you know, there's no way of knowing that. Unfortunately, we had a beautiful trade going. 11.51 stop run confirmation. This is a nice backside long. This trade was sitting, you know, roughly about 19.5 pips in profit. But the other factor behind this trade is that the confirmation was only 8 pips from the low. So you'd have been sitting on either a 13 pip stop or a 14 pip stop. And so what that means is that we're dealing with either a 26 pip take profit or a 28 pip take profit, and this trade had gone 20 pips. So we were two-thirds of the way to our total take profit, and then we get some random pound news, drives the pound down, and closes us out at break even on that trade. Really, with everything that we saw this month, you know, this just kind of puts the cherry on top. Another good example of dealing with worst case scenario situations. We had 3 or 4 trades that, with a normal size market that you see 90% of the time of, you know, 100 pip range or larger, would have ran off and hit a full take profit just based on sheer size of the market. You know, if you're dealing with a 60 pip range, you go to, or ADR, and you go to 100 pip ADR, well, if the market moves 25 pips in your favor on the 60 pip ADR market, that same size proportionately would have likely gone and hit a full 40 pip take profit. We have 3 or 4 of those. Even if 1 or 2 go hit a full take profit, and this one you don't get some random news against a position, you're looking at a month that's significantly different. So as I've repeated 5 times, 10 times today in this video, if your worst case scenario is break even or better, that's a pretty darn good worst case scenario. So all in all, while I always want to end up with a double-digit profitable month, if my worst case scenario is break even, those are months you're going to have, and those are months like May that, if you end up in that area, can't be too disappointed with that, as a lot of strategies probably got absolutely torched in that significantly reduced average daily range market that we had for a couple months period of time, with May kind of being the crescendo of that. So that is it for the May video, guys. If you're looking to learn the strategy, I would highly recommend checking out daytradingforexlive.com. You can click on the Forex Course tab, see the information behind the Forex Course, what's involved in that, and what's involved in the education. Again, a one-time payment, lifetime access. That is a live room twice a week. You get the daily market preview videos that have the listed levels every night. In-depth course, about an 8-hour course in total, as well as the members forum, member chat. So if you're looking to learn a consistently profitable strategy that can be replicated, because much of it is mechanical, then feel free to check it out. And if you have any questions, send us an email at support@daytradingforexlive.com, or daytradingforexlive@gmail.com will work as well. Either of those will get to us, and I'd be happy to field any questions that you have. All right, guys, that'll do it for the video. Until next time, happy trading.